This content is brought to you by Uphold, which makes crypto investing easy. I've been a user of Uphold since 2017. They're one of my go-to exchanges. You can buy, sell, and trade cryptocurrencies on Uphold. You can also trade precious metals and equities. They have 10 plus million users, 250 plus cryptocurrencies, and they're available in 150 countries. As with all exchanges, you can buy and sell on them, but I highly recommend you custody your own crypto, not your keys, not your coins. If you'd like to learn more about Uphold, please visit the link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Zach Bradford, who's the CEO and president of CleanSpark, a Bitcoin mining company. Zach, it's great to have you on.
Hey, appreciate it. Thanks for having me.
Zach, I'm excited to speak with you because, I've been seeing Bitcoin mining growing. There's been a boom in the United States, and I'm excited to talk about all the things you guys have been doing and your recent acquisitions and plans and so forth. But let's start with your background. I want to get to know you a bit better. Where are you from? Where'd you grow up?
Yeah, I grew up actually in a little town in Utah, Springville, Utah, about 45 minutes south of Salt Lake City.
And what's your professional background, and maybe tell us about how you first discovered Bitcoin as well.
Yeah, for sure. So, my background's actually in accounting. So, got into the accounting space, quickly shifted into the consulting side. I actually started a business after I'd been in the space for a few years that specialized in taking companies public and handled that whole process. A while into it, moved to the CFO for CleanSpark, and really the rest is history. So, started CleanSpark, co-founded it with Matt Schultz, who's our executive chairman. He and I started it going way back to, I think it's 2014 now. And we were in the energy space. So we were doing projects for the military in California. It was all about renewables, and we had software that specialized actually in grid management. So it was set up to really optimize energy systems, whether you're a business, it's your house, or a data center, to bring costs down. And so we were kind of pairing renewables with batteries, and flew out to Georgia to see a data center. And this is early 2019. Didn't know it, but the pandemic was right around the corner, and went through a data center. They were looking to bring their costs down. And during the tour, came to understand that data center was doing Bitcoin mining. And so, I come across Bitcoin half a dozen times, like I think a lot of people do when they get into the space. And it's just this passing thing. They've got a friend that does it. They've heard about it. Somebody's uncle, made some money, and somebody else's uncle, lost a bunch of money. And, but, came to see how it worked in the real world. And next thing you know, the pandemic happens, and, left with some time to think and to dig in, and really got orange pilled at that point to go down the rabbit hole and understand it. And so, about 10 months later, actually or 9 months after that, moved from the CFO role of CFO and president to take over the role of CEO. And within a few months of that, I walked into the boardroom and said, hey, we actually need to look at this really hard and, consider making a change here. And so originally we were going to split our time between energy and Bitcoin mining. But when you come to understand what Bitcoin can really do for the energy space, and, I see it as it can replace a battery, of course, functions very differently, but on a macro grid basis. So instead of focusing on a building by building, focusing on grid health, grid wide. And, so in December of 2020, as a company, we made a wholesale change. So, in the space of about a year between late 19, to late 2020, got a full education on the whole thing. And it was really great, really eye-opening. Since then, we've sold the entire energy business or shut portions of it down. and we're 100% focused on Bitcoin mining now.
Wow.
And we have just taken that energy background and expertise to optimize and make our data centers the most energy efficient data centers in the space, or at least amongst the most.
It's amazing, amazing story, and how now you're full Bitcoin mining, being an energy company before, and you're using that plethora of knowledge that you have, and I'm assuming, to better mine Bitcoin more efficiently from an energy cost perspective, which is a big item now for many institutional investors who are looking to invest in Bitcoin. They want to make sure, okay, the Bitcoin that is mined, it's using clean energy, or it comes maybe from the United States versus other parts of the world. So there's like a whole other can of worms here with Bitcoin mining that's being opened up.
Yeah.
So amazing. Now the company, if I'm not mistaken, you guys are public, right?
Yeah, we're public. So CleanSpark, we're NASDAQ traded. We're actually, I think right now we're the third largest by actual Bitcoin production in the US. So our ticker symbol CLSK. So we've just had our heads down quite a bit and focused on growing. So we've been one of the fastest growing over the last 18 months also.
That's amazing. So tell us a bit about your operations, locations, type of mining equipment that you use.
Yeah, so we focus on self-mining, meaning we own the infrastructure and data centers. We also own the servers. We don't host for anybody else.
Hmm.
So when we mine, we are mining for ourselves. And so we have 5 locations in the state of Georgia, and we have spread those out around the state. So 2 of them are in the Atlanta metropolitan area. 2 of them are further east in rural Georgia. And then one, actually, our newest acquisition is west of Atlanta, up right near the top of the Tennessee border, about 30 miles away. And and they're all various sizes. So exciting news, actually, this week, we're actually lighting up an expansion that we've been working on. So which will actually triple the size approximately of one of our facilities in rural Georgia. So a little bit about each of these locations is you can Bitcoin mine in a few different ways, but most common is you either air cool. So think of an industrial data center. These aren't always the clean spaces that you see when you think of like what Amazon Web Services does. Instead, it's all about efficiency and low cost energy. So you want to use the least amount of energy cooling the space as possible. So we use a lot of naturally cooled air, and these servers are built, like tanks to be able to handle that instead of needing to have these highly cooled spaces that you would see in a traditional data center. So most of our sites are in this air-cooled environment. So it's taking outside air, pushing it across, through the servers, and then expelling that back out. But we also have a site we're really proud of in Norcross, Georgia, that uses immersion cooling. So we take the servers and they're actually in liquid. Now that liquid is, basically think of it as a mineral-based equivalent, obviously specially formulated to handle this. But a couple benefits is you can actually push the machines a little harder because of how liquid transfers heat instead of how air does. It's 1,000 times more efficient, but it's also quiet. Air cool, you need to put those in locations and industrial areas away from where people live and function normally. But our liquid cooled center, it's in a neighborhood, and it's not any louder than your Amazon data center would be. It's actually quieter probably. And so, that's really one of the things that we do differently. And we have some expertise in, and that's frankly, as we build into the future, we're probably going to start to build more immersion cooled facilities than we build air cooled on a long-term basis. So, but everything we do is focused on energy efficiency and minimizing that. Now, the servers we use too are also the latest generation, most efficient. We expect to actually be amongst the most efficient miners in the US when you combine our facilities and the miners. by the end of this year. So that's been our main focus, which is going to matter a lot because there's going to be a halving event that occurs in 2024.
Oh, absolutely. And I definitely want to talk to you about that later on. So tell us about, the locations in Georgia. You mentioned some are near neighborhoods and so forth, and using the immersion, it's much quieter, so people don't have to worry about the noise and so forth. How are you incorporating into the grid? I know, like, for example, I've spoken to some miners in Texas, and, they'll mine at certain points or they'll shut down depending on how the grid is reacting, if there's a heat wave, whatever it may be. Tell us about that and how you're finding that balance.
Yeah, so we picked Georgia for, a variety of reasons, business friendly state, so forth. But really, Georgia has one of the most robust grids in the nation. And it's also it's actually the only place where an active nuclear plant is, being built and has been commissioned. So nuclear energy is carbon free and clean, but it's also a true base load. You don't ramp up and down a nuclear power plant, you run it flat. And so Bitcoin mining pairs perfectly with nuclear power. And so we went that way because of its carbon-free nature, but also it's reliable. And so unlike Texas, where, in June, a lot of miners in Texas had to turn off because there wasn't enough power to go to homes and things like that. In Georgia, frankly, there's actually plenty of power to go around. And so we actually integrate directly with the grid on all of our sites. And we partner with the grids on a kind of a real-time market-based pricing approach. So, their signal to us really that they want to, consumers to reduce power for a variety of reasons actually has more to do with cost than it has to do with demand needs in the state of Georgia. And so we actually can help improve wholesale pricing as we shut down different facilities. But when power prices go up, we will, turn facilities off for a few hours. But Georgia also has very low cost power because nuclear power is a really good base load. So all of these things have come together in why we picked the locations we're in. And so, I don't have all the numbers from June, but in the first half of the year, let's call it through May, we shut down for less than 10 hours across all of our facilities. And so when you look at that compared to Texas, our job is to make Bitcoin. And so you want to be in a robust and strong grid environment. But we also strengthen the grid in a variety of ways through interacting with it. But one of the biggest ways is we invest in it. We've spent millions of dollars, building power lines. Some of the money is built substations, everything from substations, power lines. And it doesn't just benefit our facilities, it benefits the whole community around us. So that's how we see a really important interaction. But that's why also Georgia is very different from Texas when they're required to shut down when there's just not enough supply.
I love that you highlighted that you guys help set up a lot of the power lines and infrastructure, because I think those things aren't highlighted very much. Sometimes in the mainstream media, you just get the headlines, right? And sometimes it's certain narratives, but the fact that you guys are in certain neighborhoods, you're helping with the infrastructure, investing all this money. And I'm assuming you're also hiring people in the local community. Can you tell us a bit about that?
Yeah, absolutely. And, I think the biggest impact we have with hiring is actually in the rural areas. So, when, in Atlanta, right? So we probably employ 40 or 50 people in the Atlanta metropolitan area. And when you think of the greater Atlanta area, it's not a big number. It's not like the airport where they maybe have, 1,000 people that work for them. Well, you move out to these rural neighborhoods or cities, and the entire city has a population of, 3,000. And so our jobs are not only meaningful, but they're high-paying jobs, not only just for the region, but they provide a good quality of life. I'd actually say for any of your readers who are interested, we actually released several videos of, showing the impact around it. Also, the Digital Chamber of Commerce actually recently highlighted us in one of their videos. But and I say that just to give perspective, because I think it's good to see the faces and names of the people it affects. But
Right.
we'll go into a rural neighborhood that, you know, in Georgia, carpet industry used to be the biggest industry. So there's carpet factories that were all over, and there still are. There's just a lot less of them.
Mm.
And so you go through a community that used to have double the population, the factories moved, the cities, come down. And, we have actually one of our staff members I'll highlight. He has a degree in computer science. And during the pandemic, he moved back home, and the only job he had is he could work a gas station that his parents owned.
Mm.
And when we came to town, it gave him his first opportunity to work in tech. And so these are tech jobs that are really meaningful in the area. And so again, it may only be 40 people, but when it's 40 people in a town of 3,000, the impact is really outsized. And I think that's something that really gets missed in the narratives, because Bitcoin miners as a whole, all of us are generally building in the more rural areas. And, one criticism is, oh, they don't employ that many people. But the people we employ, it matters a lot in those areas.
Yeah, I mean, a job, you're opening up opportunities and employment opportunities for people. So regardless if you're hiring 50 people or 1,000, you're still creating jobs. And that's the
Yeah.
point, to give people opportunities. And in addition, that could help grow the local economy. We're not talking the entire state, but, they're, like you're saying, these little towns, some of which manufacturing businesses have left, like you mentioned, and with globalization, things going overseas, we're at least creating jobs here in the United States, which I think is a plus.
Yeah. Not only that too, but one of the things that we do that is measurable in a different way is, again, small communities, not a lot of business, but we pay big power bills, and those power bills just have sales taxes attached to them. And the sales taxes attached to them already can make up huge amounts of the county and city budgets, actually. So we haven't publicized what those percentages are, but I'll just say it's significant. So, and in Georgia in particular, the sales taxes, a chunk of them, a meaningful chunk, is earmarked to the school systems. So we're meaningfully contributing to school systems in every single community that we go in through the taxes we pay. That, again, businesses, a normal business, even if they have jobs, they're not going to have $1 million a month power bill in a small town. They're going to have, payroll taxes and a few things, and they may have some sales taxes. But, the sales taxes we contribute, if you think about where that actually goes, that matters a lot. And so really, from a community investment and impact point of view, Bitcoin miners, are doing a very significant amount to really better the lives of their surrounding communities.
So are there plans to expand to other states across the US? If you could tell us a bit about that.
We're always looking for opportunities. In particular, we like Georgia for a variety of reasons. We're now amongst the largest consumer of power in the state of Georgia. We've invested the most in the grid of almost anybody. So when you really break that down, we want to continue to grow in that foothold we have. With that said, we are interested in opportunities outside of Georgia. Now, we actually have a slogan of America's Bitcoin miner, and we will be looking to American locations first. And so we've looked at things in Texas, we've looked at things, in the Midwest, we've looked at things in the Northeast coast. A lot of stuff on the West Coast doesn't make sense just from a power pricing point of view. But, we're very interested in continuing to grow. We've engaged already, we've done 4 or 5 acquisitions in the last 18 months. Our M&A focus is pretty heavy. And that's what got us from, in about 2.5 years, from, basically just entering the space to being the third largest. We do plan to continue that. But I think we're going to continue to make Georgia our home base and continue to grow there first and look to other areas second. Now, I want to address something there, though, because there's sometimes criticism on, oh, you're putting all your eggs in one basket. But you also know that basket really well. You develop relationships, you develop expertise in that area. All grids are not, made the same. We actually operate across 3 utilities, and each of those utilities, they function completely different than the other ones around them. So I really think that there's value in focus and value in relationships. Business works with people and relationships in the real world. As much as we live in this digital age, knowing your neighbor is important.
For sure. Yeah, it's a great point. Tell us about the amount of Bitcoin you're mining, let's say per month on average. And are you, I'm assuming to obviously pay for your operating costs, you're selling some of that Bitcoin and you're maybe holding some of that. Can you tell us about that strategy as well?
Yeah, absolutely. So let me establish a baseline. So we get paid as Bitcoin miners. For any of your viewers who don't know, basically the algorithm rewards us for the amount of data we process. And you measure the amount of, I'm going to call it data for the sake of the conversation. Data we process is basically measured in hashes per second. Mm-hmm. And our global hash rate right now, it's fluctuating a bit, but call it 375 exahash globally. We're currently at 6.7 exahash per second. So we're, a couple percentage of global hash rate. And our hash rate is scheduled over the next, month or so to increase about 25%. So we're going to add to that. So I just wanted to provide that context, and that will essentially increase the amount of Bitcoin we mine 25%. A lot of variables go into what that actually is on a month-by-month basis, which we don't necessarily have to get into. But we're producing between 16 and 17 Bitcoin a day currently. And so we're on track to, we should, be a little bit above 22 Bitcoin a day by the time we get to the end of the month, all variables considered. Sure. And so call it right now 500 Bitcoin, and we should be on track to, add another 100 on top of that. Yeah. And so that's the trajectory that we're on. Now, what we do with that Bitcoin is we have a markets-based approach. And so, if you go all the way back to when Bitcoin was 69,000, we did something really unpopular. Almost all the other public miners had a HODL strategy, or hold on for dear life strategy, that was sell nothing and do anything else you can to pay your bills. We were pretty vocal about it at the time. Again, unpopular. We said we believe in Bitcoin, but we believe that you pay attention to what the market is, and the market had hit a point where we sensed a little bit of stretch that may have been unsustainable at the time. And so we started selling our Bitcoin. We were selling 100% of everything we mined to pay our bills. Now, that means that between 69 and 55 and 45 and 35 and all the way down to 16, we basically dollar cost average sold out of our position. And, so we would produce 300 Bitcoin that month and sell it all 400, 500. It means our average cost of exit on Bitcoin, we actually did pretty well over the last year. Now, what we've started to do is we're now seeing a shift, obviously, and the shift that we believe in that is indicating change for, upward momentum in Bitcoin pricing. So as a result, we've started holding more. Now, the amount we hold is going to depend on what the market signals we see. That could change tomorrow, and we could hold more, we could hold less. But we're on a trajectory to hold more of our Bitcoin right now because we believe the market signals are such that it's time. It's time to start holding more. And that's going to be our strategy. But if the market shifts in a different way, I really believe, I'm a big believer, and you wake up every morning, you look at yourself in the mirror, and you try and remove all the bias that came from yesterday, and you say, what's really going on? What's the signal? What's the noise? And pursue the signal. So, but I do expect our balance of Bitcoin to increase over the next quarter or so. I think we increased it 150+% over the last quarter, what our balance was. So we're holding a little over 500 Bitcoin is our most recent announcement that we released a few days ago.
I mean, it makes sense. Like you're just moving with the market cycles, just like everybody else, right? If
Yeah.
you're at least paying attention to the charts and what's happening. And as mentioned, you guys have a business to run, you have operating costs, you have people's
Yeah.
salaries to pay and all that. But I'm assuming part of your long-term strategy is also maybe hold some of that Bitcoin long-term, maybe, right? Because we see like BlackRock filing for a spot Bitcoin ETF, and everybody else is lining up as well. There's going to be a lot of buyers, and maybe holding some of that, like as if you're an investor, right? Like I have Bitcoin, I'm not selling for like maybe 20 years or something.
Yeah.
So it just makes sense, is essentially what I'm trying to say.
No, I 100% agree. And like my personal strategy is, I hold everything. I've got the same thing, a very long-term approach. If I have, the Bitcoin I have, it's put it away and forget about it for a decade, right? But again, like you said, having a business, you have to remove ideology. You have to focus on real strategy over ideology, and that's how we move forward. But I agree with, there's a lot of, I see that as signal, like true signal. The way that the ETFs have been progressing, we've had a bunch of things over the last year where there's been false starts there. And now we're shifting to a point where the signal is starting to be, BlackRock doesn't file an ETF unless they believe they can get it through. Fidelity doesn't, file an ETF just to file it. So with the depth of the line and the names that are doing it, I think that this is a good signal that a spot ETF is in the future. And that's important because, a future ETF means you're buying a derivative, you're not buying Bitcoin.
Right.
Now, a spot ETF means you're buying Bitcoin. And that's going to take supply out of the market because they're going to do the same thing now. They're going to put it on a shelf and, take a long-term view on it. And that's going to be a meaningful step when and if, I should say, it gets approved. But I'm personally a believer that, it's going to be a near-term event sometime in the next 3 to 9 months.
Yeah, it's incredible. Especially given the context of what happened last year with FTX, Celsius, so many collapses and issues in the market. And I want to make sure that there's a distinction there because nothing changed with Bitcoin or Bitcoin's blockchain and other cryptos. Yeah. It was just these companies which were not properly, I would say, regulated because there's not clear regulations in the US as yet. Yes, there are some financial regulations and guardrails which, apply to every company to a certain sense. But despite all these collapses, Bitcoin was fine. The blockchain didn't change. Yeah. Nothing got uninterrupted. And now we see these big TradFi players, BlackRock, Fidelity, Charles Schwab, all these guys coming in and saying, okay, yeah, we recognize the value. This is a real asset. This technology has a lot of potential. I think Larry Fink, BlackRock CEO, was on Fox Business yesterday, even talking about this and almost saying like, crypto, Bitcoin's digitizing gold. It's almost like better than gold. It was really incredible statements that he made.
No, it really was. And to your point, earlier, Bitcoin wasn't affected by what happened to FTX. The signal it sent to the market was, it was a very negative thing, and real people got affected. And for me, the worst part about it is, how many people put money in thinking they were buying Bitcoin, and instead, somebody took it and made it a political donation instead of actually buying the Bitcoin. When FTX failed, there was a Bitcoin on their balance sheet. And you think of how many billions, there's a hole in the balance sheet where no one can explain it. What had happened if they had really invested that and put it where it should have gone? That would have all been buying in the space. How much higher could Bitcoin have gone? And then you look at, Three Arrows. They were leveraging everything, so many multiples for anything that they were doing. everybody was playing hot potato. If
Yeah,
everybody had bought Bitcoin that was supposed to buy a Bitcoin, I actually think that Bitcoin would have broke 100,000. And my fear is that, these exchanges, because they were an entry point into Bitcoin or any other type of crypto, how many investors did they scare off that would have, been very happy placing an investment in a solid asset on a solid blockchain that's truly decentralized? That's what Bitcoin's all about. It's about removing the middleman. And all we did with these exchanges is add a middleman that couldn't be trusted. And so, I think that that's going to be the biggest thing about the next cycle is when you take an ETF that's regulated the way they are, audited the way they are, that's doing one thing, buying Bitcoin, that's going to be huge. And I think it's going to make a big impact to where Bitcoin's trajectory goes over the next 5 or 10 years.
for sure. So can you tell us a bit about and take us behind the curtain a bit? And I don't know how much you can talk about, how you're selling and so forth. Like, are you selling to institutions, via OTC, or are you selling via an exchange, let's say Coinbase, whatever it may be?
Yeah, it's actually in our filings. So we have to basically transact through someone that has a SOC report or an internal controls report. Coinbase is the one that meets that requirement, that is the trusted party in the US. All of our Bitcoin is sold through Coinbase, and that we don't sell it to anybody else. We don't do any private sales. We don't sell it to institutions. It just goes via one direction. And I do think that's going to be another thing that does develop. NASDAQ is announced that they're going to have an exchange.
Yeah.
And that's, of course, going to be a trusted name. I think that the trust in exchanges will increase. Now, exchanges have a place and a purpose. As Bitcoiners, we talk a lot about, not your keys, not your coin, put it in cold storage, things like that. That is all true. But you think about somebody that wants to trade, let's say, or they view, Bitcoin a little differently, or they want a really easy access point. They want to go into Fidelity and click buy Bitcoin the same way they want to,
Right.
buy a stock, and that's how they're viewing it. I think these on-ramps are very important. And that's why I do think that as exchanges build in trust, and I think that Coinbase, frankly, is, a trusted place to do it. Obviously not giving a full endorsement. They have all their problems with the SEC right now, but it's not about Bitcoin, right? These on-ramps are needed. And then, most of us in the space will use that to then move it to cold storage and then back on the exchange if we want to sell it again. The exchanges are important, but we need the exchanges to be trusted.
Yeah.
And we're better off having that happen in the US where regulation can occur properly. If all these exchanges get pushed offshore into the Bahamas or wherever else, how much can we really trust,
Well, that
even the on-ramp and off-ramp point, right?
Yeah. Well, that's what
So
happened with FTX, right? It
yeah.
wasn't FTX.us, it was FTX.com that was overseas, that
Mhm.
was doing all the shady stuff, sending it to Alameda, right? And even though they were
Yeah.
meeting with the SEC, nobody knew what was going on over there.
Yeah. So it is important that we don't run everything offshore. Like if we is in the US, if we lose that battle and everything rushes offshore, that's going to set the US back decades in this space, because somebody else will make the regulations. Someone else is going to decide how to do it. And then every time an exchange in the Bahamas doesn't do what it said it was going to do, it's just going to make it worse for everybody. So it is important that we in the US take ownership. I really believe strongly about that.
For sure. Yeah, absolutely agree with you. And then look, at the same time, you have, if you are tech savvy, or, you're so, you take the time to understand cold storage and your personal wallet. Like, I store the majority of my Bitcoin on a hardware wallet, private keys backed up in different
Mhm.
places. But do I have some crypto in exchanges like Coinbase, which I'm trading? Yeah. But, to your point, we need to trusted institutions like Coinbase insurance, custody, they're
Yep.
audited, all of these things. But, I hopefully, as this industry grows, people learn more about self custody as well, and they can just hold the crypto in a hardware wallet, which is the ideal scenario.
Yeah, it's the real way to, it's the right way to do it. But again, an off ramp and like those are important, off ramps and on ramps.
Absolutely. So let's talk about the halving coming up next year.
Yeah.
So of course the rewards are going to be cut, the difficulty rate for mining will increase. And now you have these big players coming in, and I think there's going to be growing demand for Bitcoin than ever before. How are you planning and prepping for this? And maybe you can take us behind the curtain to explain the difficulty and the less, the cut in Bitcoin rewards.
Yeah. So, we've been planning for halving really since the beginning of the cycle. You really need to think a cycle ahead. Where do you want to be? So these cycles, by the way, happen every 4 years approximately. And what happens is, Bitcoin will have 21 million Bitcoin that will ever exist. Well, 900 a day is being produced approximately right now with 6.25 every 10 minutes. So you do the math and you say, hey, we're going to run out of Bitcoin. Well, a new Bitcoin will not stop being produced until 2140 approximately. And so the way that the algorithm adjusts for it is the way to think about it in two ways. Difficulty, which means when there's more processing power, therefore the block is solved in less than 10 minutes, it makes it harder to solve. So when the average time to solve a block is 9 minutes and 50 seconds, it makes it harder. And that's difficulty. Now that happens every 2 weeks. And so we're growing. We're going to add more hash rate to the network in, later this week. So that will actually make assuming that luck stays the same, it'll make difficulty a little bit harder for everybody, ourselves included. And so now, instead of just building to nowhere, miners need to pay attention to efficiency, and then the halving. So let's talk about the halving before we talk about efficiency. So the way that it really works too is every 4 years that 6.25 gets cut in half. So sometime next April, May, when the halving occurs, there'll be 3.125 Bitcoin produced for every block. So about every 10 minutes. Now, on top of that block, there's transaction fees. So there's a lot of noise recently about transaction fees because of ordinals, and there was a temporary spike. And, the algorithm is set up on a long-term basis that miners should optimally, long-term, be supported by the transaction fees as that reward gets smaller. Now, as we approach this, it's important to recognize what's going to happen to global hash rate. And that comes down to efficiency. So let's say that the price of Bitcoin stays the same, but the reward gets cut in half. That means all the miners' revenue just got cut in half. So if everybody's hash rate is on there, it's not created equal is the key thing to understand. So somebody has an efficiency, meaning the power it takes to actually produce a Bitcoin is 40 watts per terahash. We're going to approach halving with right around 24 watts per terahash. So if you break that down, it costs them almost twice as much power, which means their power bill will be twice as much when halving occurs. What we're really betting on, and I think will happen, is there will be a chunk of global hash rate that unplugs. And that will then make it easier for all the miners that are left over to get a bigger piece of the pie. So even though the block is smaller, it means I get more blocks as a result. And then the cycle starts again. Everybody builds from that base efficiency and we go from there. Now, there's also the other possibility, and the ETFs are going to make this really interesting. And that is Bitcoin's price doubles. That means everybody stays plugged in. We all keep building. Well, as we all keep building, it stretches that out, and the less efficient miners, live to fight another day for a while, and they get time to upgrade their fleets. But really, you don't want to bet on hope. Hope is not a plan. Hope is not a strategy. So we put ourselves in a position that if let's say the ETFs file and Bitcoin price doubles because supply and demand is changed, then we're just going to benefit that much more. But you can't just fix efficiency overnight. You really have to buy the right servers. You have to buy them at the right price. And that's why, again, we started thinking about this at the beginning of the cycle. We built from that way, from the ground up. And as we approach the 2024 halving, we've already started having some conversations, but we'll start planning for 2028. Probably in the months leading up. We won't make any decisions based on that for a few months after, but it's going to be really important to think about 2028. That's going to be the one where the reward is going to really start to matter compared to Bitcoin's price. Because you think about, 3.125 cut in half starts to get pretty small at that point. Bitcoin needs to be doing really well, but efficiency will matter a lot. So again, that's how we're preparing for it. That's what halving really is. I think that, and I'll speak maybe from an investment point of view, but as we evaluate whether it's a new site that we're going to acquire, or, if I'm personally identifying, maybe a miner I might invest in, that's actually my number one criteria is how well are they prepared? How efficient are they going to be when halving comes along? Because, nobody wants to run at a loss. So if you're left with, unplug and call it a day, or ride into the 2028 halving, that's what's going to matter.
For sure. That's really great insight into how you guys are planning that. Appreciate that. I want to get your thoughts on El Salvador and what they're doing, making Bitcoin. They obviously made Bitcoin a legal tender. They're looking to mine Bitcoin to volcanic energy. I think they're doing a bond as well. What are your thoughts there? And do you see other countries following suit? And could other countries start dedicating some of their natural energy sources to mining Bitcoin, given that, we're entering this new era of Bitcoin adoption?
Yeah, I think first, any country taking some of their energy resources and dedicating it to Bitcoin, I think that's a natural progression. I think that nation state mining is going to become more and more common. I also think, though, that in some of those countries, the path of least resistance is to just either partner with or support the miners in the area, especially if it's helping, jobs, taxes, gross domestic product, whatever that country really, needs and wants to focus on, including the US, right? Like, I don't necessarily see the government spinning a big Bitcoin mine. Sure. Instead, I think that when they get the message that, hash rate inside of countries matters, they'll hopefully just make it, a regulatory path that makes it, easier and more streamlined for large scale miners like us to interact with the grid in beneficial ways. But absolutely, I think what El Salvador did was, very smart. They obviously were doing it for their own reasons to get a little bit more control over, their reserve currencies and things like that, to really help elevate them as a country. And, I'm actually excited to see what they do, with, I think they're calling it the volcano bond. They want to use some geothermal. Geothermal is very clean. It's also very expensive to build. And so it makes sense to have a country build that instead of, a miner like ourselves. Making the geothermal investment on its own, wouldn't make sense for us, but it's going to make sense for them. So, I think it's going to be really interesting to see how, countries contribute resources, allocate resources to it. But I absolutely think it's going to happen. And I think for countries whose currencies are not as well supported as, the US dollar or some of the other major countries, Bitcoin's a natural place to go. If you're sitting on a shaky currency and, from a credit point of view, other countries maybe don't want to do business or transact in that, go to Bitcoin. Bitcoin can't be inflated, which is one of the main concerns when countries are working with each other. Is this country just going to inflate their currency and I'll end up with something that isn't worth anything? Bitcoin's a natural place to go because it's neutral ground. And that neutral ground allows both parties to exchange in something that is, really moving in a deflationary manner instead of an inflationary manner, at least as far as it goes over the cycles. So again, I think it's a great place to go. It's also something where, a country that hasn't developed all the infrastructure around finance, it's going to be built and ready on every citizen's phone, when the time is right. We're seeing a lot of that happening in Africa, for example, where, it's easier for them to transact with Bitcoin than anything else because, people don't have access to traditional banking services. So you kind of have this banking service layer that's built in, and the layer twos are making that a lot easier, like the Lightning Network.
Yeah, for sure. And a question for you, this is a hard one, but do you see central banks, and maybe not next year or the year, but like 10 years from now, maybe holding Bitcoin on their balance sheet like they do gold? Do you see that happening?
If I was to make a bet, I would say 100% I do. Yeah.
Mm.
I think that there's going to be this push and pull, about really incorporating it in to decide whether it's a threat or not. But then on a long-term basis, just like governments hold all kinds of different assets on their balance sheet, I think that it's going to make sense to put Bitcoin on the balance sheet. You know, we're going to be talking a lot more about sats in the future than we are going to be talking about whole Bitcoin. I think Bitcoin's on a trajectory to where, it's not going to happen tomorrow, and it's not going to, maybe not in 5 years, and it may take longer. But I think it's a seven-figure asset. And when something starts to be an asset like that, who owns it? Anybody that keeps treasury reserves owns it. Companies are going to own it. Governments are going to own it. Banks are going to own it, and it's going to be just an asset that they park for its value in the same way that they would real estate. And that's going to make most of us that we're going to be talking about, 100 sats instead of talking about one Bitcoin, right? And that's the great thing about Bitcoin too, is it was set up that way to where it's divisible, and we're going to continue to transact in it or store value in it, whether it's technically 0.0001 Bitcoin or whether it's one Bitcoin. And that's how this whole, it was designed that way to help it be sustainable on a long-term basis.
I said this exact same thing on the podcast many times that, as the valuation of Bitcoin grows, people are going to be transacting in sats. We go to the grocery store or whatever,
Yeah.
as these infrastructure items get set up using Lightning or whatever it is, you pay, I don't know, 100 sats for something.
Yeah.
I think that's coming for sure. So I definitely agree with you there.
100%. Yeah. I think, and we're seeing it small, but, wide scale adoption, I don't think is too far off. The same way you touch to pay with Apple Pay, hopefully we can touch to pay with Strike or, any of the other Lightning Network products at any store, any grocery store, the hardware store, whatever it may be.
For sure. So Zach, I got some wrap up questions here for you. First, if you could create your own metaverse, because the metaverse is coming, or one could argue we are in metaverse 1.0 as we're talking right now in social networks. What would the theme be for you? Where would you escape to?
What I would do actually is I wouldn't have one, because here's why. I think that there's going to be plenty of them.
Sure.
I think that there's so much digitization that we interact with. My metaverse would not to be to have one, and would be to go outside. Like get some vitamin D, get some sunlight, go walk through the woods. I'm here in Vegas and it's incredibly hot outside, so I'm not going to be doing that this moment. But I really like to get outside. Like there's so much,
Sure.
I feel like I live my life in an office in front of a computer, and there's nothing that can replace, getting outside in nature.
For sure. I certainly agree with you that I love to, because, similar to you, I'm in front of a computer a lot. I tried to get out as much as possible, just spend time outside, get some quality time outside, sunlight, fresh air, and all those things. Rapid fire questions. Favorite food?
Ooh, Thai food. Anything Thai food.
Favorite musician or band?
You know, for me, it's very mood based, but right now it's a Thursday. Rewinding the clock a little bit on that one, but Thursday.
Favorite movie?
Ooh, same thing. Whatever the latest comedy is what you'd probably find me watching.
Favorite book?
Two favorite books, I would say. Meditations, Marcus Aurelius, but also Lives of the Stoics by Ryan Holiday. Recently read, great book, just to get a little bit more background. I'm big into following Stoicism and incorporating it in my life and getting insights on the people part of it. I really enjoyed that book.
And finally, hobby or pastime when you're not working at CleanSpark?
Um, I really like cycling, mountain biking, but I also just bought a drift car. So looking forward to getting into that. So it'll be new to me. One of our actual our VP of mining, he's been into it for a long time. So he's going to show me the ropes. It should be fun. So
That sounds fun. Zach, pleasure chatting with you. I'm excited to see the future updates around CleanSpark and wish you best of luck in the expansion of the business. Maybe we can schedule something for you to come back pre-Bitcoin halving next year so we can talk about your plans there if anything has changed, and maybe an ETF, a spot ETF has been approved by then. But thank you so much.
hey, I'd love to do it. Thanks for having me today.